Welcome back. I'm Pratap here. Today is the 29th May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. We will also look into the trade opportunities in NIFTY and BANK NIFTY based on the high liquidity zones and bearish trade setups during the intraday. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. From our channel, click on this community tab. You will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Just click on this link. Now we are entered into the supply demand zone price action course. So in this playlist you have all the training lessons are available. You just need to scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in the channel. Now let's get into the analysis discussion. First, let's start with NIFTY and BANK NIFTY. See, here we have a 15 minutes demand zone. This is a normal demand zone only. Yesterday we discussed several possibilities. One of the possibilities was there is a possibility with a gap down prices will be coming down and this 15 minutes demand zone will be violated, and there is no much significance also for this 15 minutes demand zone. The reason is currently 15 minutes trend is a downtrend. Even after violation of this 15 minutes demand zone, the downtrend is getting continued. But yesterday I told you the 5 minutes high liquidity demand zone, probably it will hold the stocks for some time. At least one trade you may get. That is what I told you. Because the trend is bearish, even then, because this is a high liquidity area. High liquidity zones works even against the trend. At least one trade they will give you against the trend. Sometimes it may give you multiple trades, but at least one trade it may give you. There is no guarantee it will give, but we have a confidence that because it is looking very strong. And this 5 minutes high liquidity zone is a fine-tuned zone inside 25 minutes high liquidity zone. So it is playing two roles. One is it is playing the high liquidity role, and also it is playing the fine-tuned role. And inside 25 minute zone, but here again we have 15 minute zone is also there. 15 minutes high liquidity is also there. So that is the reason why we have a confidence that there could be some strong order flow in this area. That is what happened today. See, market came down with a gap down. But this 5 minutes area, which is inside 15 minutes and also inside 25 minutes high liquidity zone, holded the prices for some time. Prices came and then again moved nearly how many points? Here it's around 22,760 or 761 or 762. That is the area. And it has given up to 22,823. Nearly 60 points move it has given. But it's very difficult to catch this move. If anybody would have got the trade, if you would have put your order, pre-market order within this area, and if your trade would have been triggered, definitely you would have captured a 50 to 60 points from here to here. Definitely you need to exit here, the high of this candle, in case if you are holding the prices, because this is a pro-gap area. And moreover, this is a, this is a bearish market. So in a bearish market, you can't expect a huge targets unless trend is settled. But anyway, the point you need to understand, it holded for some time high liquidity, and after that again the bearish market continued its bearishness and violated this 5 minutes area, and then I am deleting this because to bring the clarity. So here inside you have 15 minute zone. Inside 15 minutes high liquidity we have fine tuned 5 minutes. Again this entire thing is inside 25 minutes high liquidity area. Now what happened? Price has now entered into this 75 minutes high liquidity demand zone. This 75 minutes high liquidity demand zone is having a fine-tuned 15-minute zone. This is the fine-tuned 15-minute zone. Let me show you. This we already discussed and we have drawn in our last Sunday's detailed analysis video. We have drawn these zones. Why I am showing you the importance of fine-tuned zone and the zone, and also we discussed about a new strategy, the lower time frame zone, which is responsible for creation of a higher time frame zone. That lower time frame zone will be having a strong order flow. This is what we are going to discuss in our next training lesson, lesson 22. See, we have inside a 75 minutes high liquidity zone, we have a fine-tuned 15 minutes demand zone. We have a rally, 1, 2, 3 base candles and again a rally. And inside this fine-tuned 15 minutes demand zone, we have again a fine-tuned 5 minute zone. This is not a high liquidity zone. This is a fine-tuned zone. What kind of fine-tuned zone? The fine-tuned zone that is responsible for creation of this 15 minutes zone. Because at the distal line it is there. So definitely it will give you a very good trade. At least one trade. Sometimes you may get multiple trades. See, today price has entered into this fine-tuned 5 minutes area here. In which candle it reached? At 11:15 candle it gave you. It gave you a trade. And here you have a target zone is there. Sorry. Let me, yeah. This is the target. We have a drop candle with hidden body, 2 base candles and again a drop candle. See, here it reached the target when at 12:45 it reached the target. You got an entry at 11:15 and it reached the target at 12:45, and also you have a very good RR also up to here. You got a very good RR. Because 15 minutes, 75 minutes high liquidity zones, mostly your target will be 15 minutes. Many times the stocks reach up to this 15 minutes target area. That is what happened. We have already built a 75 minute strategy. 75 minutes and daily high liquidity zone strategy. Entry will be at the fine-tuned 5 minutes area. Target will be 15 minute zone. See, you would have got an excellent RR. So today we got a trade in this zone. And this is the one we already fine-tuned in our one of our previous videos. I think last Sunday detailed analysis video we discussed this. That's why it is very important to listen your HLQ analysis videos and NIFTY and BANK NIFTY analysis videos, because they give you plenty of trade opportunities, especially high liquidity zones. Actually, to be honest, it gave you 2 opportunities today. Why 2 opportunities? Let me tell you. This is the high liquidity opportunity. And here you got the trade around 22,705. $22,705 you got the entry. Or we can say 706. And here you got the exit at 22,798.55. Your target is 22,798.55. And what is your entry? 22,705.60. Let us add some buffer. 22,706. Seven not 6, 7 not 7. Definitely you keep some buffer, or maybe 710, or let me say 7 not 9. So 89.5. Let me say approximately 90 points move you captured here, from here to here, because if you would not have added the buffer, definitely 92 or 93 points move you would have captured. But let me say approximately 90 points. Maybe some people 85 points if you add more buffer. But you got a good RR and you captured almost or a little over or little less. 90 points move you captured. At 11:15 you got the entry, and 12:45 you got the stop loss. Almost within an hour you captured this entire move. Not only this, you also captured again another 90 points move. How? Your bearish trade setup. Currently the trend is bearish. See, prices entered into this area. Go for a short trade. This is a 15-minute zone. How can we take a trade in 15 minutes zone, you will ask. Fine tune this 15 minutes to 5 minutes time frame. There you will get a trade opportunity. See, here you have a rally, 2 base candles, and a drop candle is there. Actually 3 opportunities you would have captured today. Why I am saying 3 opportunities? This was the zone created, again picked up the orders and then moved down. At 9:55 it picked up the orders. Your bearish trade setup. That is what yesterday we discussed. Day before yesterday we discussed. We've been taking trades, bearish trade setup, because a trend is our friend. This is a newly created 15-minute zone. Inside a newly created 15-minute zone, we have a rally, 2 base candles and a drop candle, and then moved up, picked up the orders, and again prices reached up to this 15 minutes. So that means here you would have captured 90 points. From here to here again another 90 points. Again you go for a short trade here. Why short trade? Because it is a bearish trade setup. And during the bearish trade setup in the intraday, in the fine-tuned zones, within 15 minutes you have 5 minutes fine-tuned, definitely it will give you another short opportunity. Suppose if it is violated, with stop out you will get out. A minimal loss you will get. But if you take and see here again another 90 points move from here to here. At 12:50 you would have taken a trade and you would have exited at 14:45 candle. So 90 plus 90 plus 90. So 270 points move you would have captured in Nifty today. And this trade both are bearish trade setup trades, trading in favor of the trend. And this is high liquidity zone trade, trading against the trend. Maybe it could be in favor or it is not in favor. Whatever it is, high liquidity zones will work. This fine-tuned zone has given you a 90 points move. That's why understanding bullish bearish trade setup is important. High liquidity zone setup is also important. If you are telling I will take only HLQ related trades, you miss trades that are in favor of the trend. Or if you say I take only bullish bearish trades, then you will be missing HLQ trades. Some of the HLQ zones are very strong, especially the fine-tuned zones from 75 minutes as well as the daily zones. See, this is a 75 minutes high liquidity demand zone. It is having a fine-tuned 15 minutes zone, and also it is having a fine-tuned demand zone. And more importantly, this fine-tuned demand zone is responsible for the creation of 15 minute zone. Such kind of zones are having a very strong order flow. That is what we've been discussing for the last 3 to 4 weeks. That's why lesson 22 is designed for that particular new strategy. Based on that new strategy, we got this trade. and it reached the target. 90 points move. When against the trend, we captured 90 points. And this is possible only because of the high liquidity zone. It gave you 3 opportunities. If anybody would have got these 3 opportunities, definitely you are a very good way you are doing your trading. This is the first trade, this is the second trade, this is the third trade. And this is the one this strategy I already explained you. I didn't give you a detailed explanation. You will be learning in the phase 3 training program. Zone confluence strategy. In our Q&A 13 video, question and answers 13th video, when I explained about that AB Capital, Aditya Birla Capital stock, I have gave you overview about this strategy. Because someone recently asked a very good question. What is the use of the weekly zones you are publishing every week? How we can make use of it? To answer that question, I gave you overview about this strategy. There are people, they won't take lower time frame zones just like that. Only confluence with higher time frame zones, either ITF zone, they should have a confluence, or HTF zone and ITF zone together they should have a confluence. Such kind of trades only they will take. Especially in bullish or bearish trade setups, 5-minute zone having confluence with 15-minute zone is a powerful trading strategy. Yesterday also we got such kind of trade, bearish trade setup. Yesterday we discussed in the HLQ analysis video. If you missed yesterday HLQ analysis, please listen that. Today also same thing we are doing. See, 15-minute zone having 5-minute zone confluence. Such kind of trade has given 2 trades it has given you. This is the first trade and this is the second trade. How excellent it is. Even if it is not having confluence also, still 5-minute zone will work, because currently we are in the bearish market. In bearish market, short trades will be enabled even in 5-minute zones. Sometimes few 5-minute zones will be violated even in bearish market. But the fine-tuned zone inside 15 minutes work very well. In between small zones are there. See, here you have a drop, base, rally. This is also given a trade opportunity. See, here prices entered. If you would have gone for a short trade, it gave you move. May not be 100 points. Definitely how many points? 22,706. This is around 22,706. And here 20,749. 45 points move it has given, or 43 points move from here to here. to 45 points move you would have captured. Maybe this could have been definitely this is a 1, this is a 2, maybe it is 1:2.5 RR you would have got. Not definitely 1:3, 1:2. If you are a highly experienced person, you would have captured this move. For beginners, definitely you would have avoided this. But our target is not on the 5-minute zone here. Why our target is not on the 5-minute zone? Demand. This is a 75 minutes high liquidity. Target is 15 minutes. We know all these zones will be violated. But I am talking about the short trade, not this long trade. The short trade, when prices came here, from here to here, the move is around 40 to 45 points move. That is what I am talking about. This move, okay, I'm sorry, not this move. This was the one I am supposed to talk. And from here to here is the move for 15 minutes. Target for high liquidity zone. This is the one. Always remember, high liquidity zones will work against the trend during the intraday. It will give you up to 15 minutes target. And the success rate is also 80% for 75 minutes and daily zones. And second one is this one, our trading in favor of the trend. That is what we do always. So further you got these short opportunities. So this is about Nifty. I don't know how many of you captured these trades. If any of you captured any of these trades, please mention in the comment section. At least I know how you people are progressing. If you are not mentioning anything, how do I know? What kind of based on your feedback only I can give you better advices. Especially people are capturing, making use of these reports or making use of my analysis reports. And if you are progressing further and you are making money, at least give an indication. I am not telling you how much money you gained. You need not tell about that. If you want to share your happiness, that is up to you. Some people are telling, or at least what minimum thing what I expect from you is, okay, here these many points more I captured. How many lots you brought and how much money make, it is up to you. You need not tell that point. If you want to tell, okay. If you tell, that is a motivation to the other people. But at least how many points you captured. Whether you used the HLQ strategy or you used the bearish trade setup, or in the bull market it is a bullish trade setup. That way if you indicate, it will be a motivation to the other people, and also it is an indication that for me how you people are progressing. See, yesterday we got trade opportunities. Nobody mentioned whether you got same trade opportunities, same strategy. We use it today. What is that zone confluence strategy? 15-minute zone is having 5-minute zone. That strategy gives you good success in the trending market. Trending means uptrend or downtrend. Currently it is in downtrend. 15 minutes trend is downtrend. That is intraday trades. You have to go for short trades. Now trend may change because prices are entering into weekly, daily area. There might be a possibility if institutions decide to keep the Nifty trend as uptrend. Currently daily trend is uptrend. They want to keep the same trend. They won't violate this zone. Now 15-minute zone, after reaching into this area, this is a daily area, institutions may create a new 75-minute zones, 15-minute zones, push the price. At the time one of the 15-minute supplies will be violated. At the time trend will be changed to again sideways and then uptrend. At the time onwards, your long trades will be enabled during the intraday. But until the 15-minute trend does not change, your long trades are not enabled. Please remember, you cannot go for long trade. You can go for long trade only in high liquidity zone, that too for intraday point of view only. High liquidity strategy is only for intraday point of view. That way you have to plan your trade. Okay, finally you captured, and at the end of the hour, what happened? Market, the last 20 minutes, prices came here, just violated this zone, pierced. Pierced means it is violated. Now it is no more valid. You cannot. Why it is violated? Because it is already a tested zone. But most of the time during the intraday, it will give you second test also. But here you see, again a rejection came, but this is not good enough, because here, this is the last hour of the trade. You have to target only this 15-minute zone. It reached the 15-minute zone, to be honest. See here. We have a drop, base drop. After that, prices opened, picked up the orders from this zone, again moved up and reached the 5 minutes target. Drop, base drop. Because the last half an hour or 45 minutes or last 1 hour, your target is not 15 minutes target. Your target is only 5 minutes target. Last 1 hour trade. Several times I told you this point. It gave you. Not only that, it gave you again a short trade. Why short trade? Because currently market is in bearish. In bearish you can go for a short trade. But how many of you trade during last half an hour? We don't, right? So that is the reason why you might not have taken these trades. But still our zones worked. And now third attempt it is violated. That is at 3 o'clock, 5 minutes candle. But this trade happened on 2:45 candle, 2:45 minutes. The same candle it reached the target. If you look into 1 minute candles, you will get clarity. See here, here you got a trade at 247 candle, and 249 candle it reached the target. But you may not be having a good RR to accept this. Definitely you rejected based on the RR, but I am just demonstrating the power of the high liquidity zones. Okay, so this is about Nifty. Now, why I am giving a lot of explanation, I can finish in just 5 minutes. I just want to know how, because you people are not responding properly in the comment section. If you are really capture the profits and if you are mentioning in the comment section, I feel more happy. That is the motivation. Okay, yes, I am doing this analysis. I am sending you the reports. These reports are helping you. You are making use of that. Without making, you are just watching the videos. Or okay, if you are watching and learning, that is acceptable. No objection in that. You are just watching and not taking trades. That is a painful thing, because when you got plenty of opportunities. Whatever yesterday analysis discussion, day before yesterday analysis discussion, whatever happened, same trades only we took today also, nothing more. That is playing in favor of the trend. Now first time today prices came to the high liquidity zones. Now against the trend also we are playing. This is a perfect opportunity. Gave you 90 points move. Okay, this is about Nifty. This is a 90 points move from high liquidity zone. Why I am proud about this? Because this is the concept we developed. With the help of the software, we are getting these trades. Playing in favor of the trend is already existing core strategy. This is not my strategy. The existing supply demand zone price action, the core strategy, whatever it is suggesting, trade in favor of the trend. Those are trades, these are trades. Because we learned these concepts very well, we should feel proud, definitely. It indicates how well you understood the concepts, playing in favor of the trend. But HLQ is not like that. Even against the trend also we are playing, still we are getting a 15 minutes target. See, today market is such a bearish market. Still HLQ zone gave you till 15 minutes target. It gave you a very good RR. Probably you would have got 1:7 or 8. Somebody calculate this RR, put them in the comment section, please. How much RR you would have got from this demand zone, fine-tuned 5 minutes demand zone to this 15 minutes supply zone target. Next, we look into the Bank Nifty. Bank Nifty also same. This scenario also we discussed. Yesterday we discussed here pro gap area is there. There is a strong order flow and it may give you a trade. That is what one scenario we discussed yesterday. And second scenario also we discussed yesterday. What is that in the analysis, in the Bank Nifty analysis, if you listen, I told you one point, there is another possibility with a gap down, prices will go down. From this 5 minutes high liquidity demand zone, it will pick up the orders and again prices will move up. That scenario also we discussed. Anyway, this 5 minutes demand zone is a normal demand zone. The only doubt we have, it is a pro gap area, how strong it can hold. That is a question, because previously once here and yesterday also near to this. And only doubtful thing is yesterday it closed in this area, finally. That's why there is a possibility with the gap down, this entire thing will be wiped out. And institutions would have cancelled these orders. That possibility is also there. Maybe there is a strong order flow, everything is wiped out. Anything. But we can't plan trade in this zone. The reason is we are against the trend and this 5 minutes demand zone is not a high liquidity zone. Only for targets point of view we are keeping this zone because it has a strong pro gap order flow. So today everything is gone. But who stopped the market fall immediately in the morning session? That is the 5 minutes high liquidity demand zone. And this zone is already tested. Previously it is already tested several times. This is one time and this is the second time. This is the third or fourth times. And today it is the fifth time. See, today from morning it opened from here within this area. If anybody would have kept pre-order, maybe your order would have been executed. From here, it has a bank nifty up to here. It has given around 270 or 280 points move. Let me check. 48,770 somewhere here. Until here, 49,019 or 20, 49,020. This is 770 approximately, I am saying. I think it is 150 points. 150 points move, not 280, I am sorry. 150 points move it has given. The 280 points move is here, from here. That we will discuss. So today morning it gave you 150 points move. Definitely you would not have captured. Many of you would have missed this trade. Why I am saying you missed this trade? Because this is a morning 9:15 candle. Opened from here and moved from here immediately. Let me open 1 minute candle. You will get clarity. See here. Everything happened in the morning 9:15. Morning 9:15, the volatility is high and in a single shot, everything moved. If you get a trade, you are lucky. It's a lucky trade, but rarely many of us will be missing. And moreover, definitely you would not have taken this trade. The reason is the risk is also very high. 5 minutes this zone. Maybe somewhere at bottom if you would have planned, but next time this zone is violated. If anybody would have planned any trades at the near the digital line, definitely your order would have been stopped out. But anyway, I already told you every 5 minute zone will be having some expiry period. And moreover, it is already tested 5 times, somewhere here first time, and again here second time, again here third time, fourth time, fifth time, sixth time. Sorry, this is the 7th time. 7 times prices entered into this zone. This is the 8th time. So 8th attempts prices entered, and finally, actually 9th, this is the 8th, somewhere here. So these many times these holded prices means definitely. But only thing is it might not have given more opportunities because risk is very high. You would not have taken many opportunities from this zone. Anyway, it has gone. But what about trading in favor of the trend? What is the trend? Downtrend. Are there any short opportunities we got today? Yes, we got the short opportunities. This is one short opportunity, but I am not really convinced. It is an opportunity, but I am not convinced. The reason is this is not a very good considerable leg out. After seeing price action, we will think we missed a very good short opportunity. We think like that. So that is the reason why I am not considering. I am just telling you. This is an opportunity, definitely. The opportunity we would not have considered it because a leg out is not good. This is a medium size candle. You can't consider this as a leg out. If anybody think this is a trade, definitely it is not a trade. But this is a valid zone. Which one? You can consider this is a leg candle, 2 base candles and a drop candle. But prices did not reach into this area. But here you got another opportunity. But here also the same problem. Leg out is not great, but okay. At least better than ERC candle. But some people may not consider. If anybody would have considered, probably here you would have got a short opportunity. But otherwise you might have missed this trade. Let me hide this. How this candle will change, you will understand. Because many times the biggest problem, how this candle will change, you will understand. See? Now, I'm sorry. How this candle looks like now? Tell me. This is a ERC candle, failed ERC candle. you will use this as a leg candle. This is a base candle, and this is again ERC candle, and a minimum body is available. So definitely this is a zone. Wick to wick you would have got a trade. But the moment you see this candle, the length of this candle is changed. This is one problem with trading view always I am seeing. That's why I am saying some people will consider this as a leg out candle. And then we have a very good follow through candle. It gave a trade. And from here to here, you would have captured. I think this is the 280 points I said earlier. This is the trade. And how much here? It is 48,410. And here 48,693. So 280 points move is from this zone to this zone. The one I was talking about, 280 points capture, that is here in this zone, not here. Here only 150 points. Here 280 points move. If anybody would have considered this zone. See, that's why I'm telling you. See, the moment you keep this candle, this is not looking like. The moment you hide this candle, see here now you got the clear picture. Compare it to the other candles in this chart. These are the drawing issues in the software. So this is a ERC candle as a leg-in, this is a base candle, drop candle, and you got an entry from here to here. You would have captured 280 points move. But I am sure many of you don't hold up to here because prices are moving here. I am sure you might have exited one of these candles here. Patience, because we never know. Market will come down again, from here it will pick up, it will go up. After buying any shares, generally how your psychology of your mind? Exit, 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 exit. That is what our mind will be telling us. If continuously falling down, okay, our mind says wait, 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 wait. That is what our mind tells. But if it is moving like this, immediately our mind says exit, exit, exit. So definitely somewhere here you will exit, or here. Then you would be capturing only maybe 100 or 120 points move you will capture if you exited here. So this is 570, and you took your trade at 693. So 573 to 690. So 120 points move you would have captured in case if you listened your mind and exited here. Sometimes we have to listen, because when you don't have ambiguity, what's really happening to the market. And moreover, we are nearing to the last 1.5 hour, 2 hours of the closing hours. It is already 2 o'clock in this candle. Definitely you would have exited in this candle, but after that see the move. Very quickly it gave you another 250 points move. 150 points move. Another 150 points move it has given from here to here in short span. Then our mind will say, why we exited unnecessarily? We would have captured 280 points from here to here. This is how we think, right? Am I telling right or wrong? At least you please put your opinion in the comment section. At least I will understand. Okay, we are all thinking in the same way. All our minds are thinking in the same way. There is a practical versus theory. Theory is you take a trade, exit here. Practical is you take a trade and you exit here. Okay, again, after that, why this move? The reason is very simple. We are now entered into the 75 minutes zone. Inside 25 minutes, high liquidity zone is there. Generally, once reaching the 75 minutes, sorry, not this one, I'm sorry for my mistake. This is the 75 minutes high liquidity zone. Because of this 75 minutes high liquidity zone, some reaction you have seen. Why is this much reaction? Because, listen carefully. because you have to understand all these concepts. The reason for this move is because prices reach to this 75-minute zone. What is the 75-minute trend? Sideways. 75-minute trend is sideways. That is what we discussed in the detailed analysis video on last Sunday. In sideways market, you have both the edges. Your knife, your sword will be having both the edges. So you get long opportunities, you get short opportunities. But a bullish trade setup, you need to take your trades only at the extreme ends. Extreme ends are here for your WIT trade setups or DIT trade setups. Your entry zones are extreme levels. Assume it is a WIT trade setup for the 75 minutes time frame. At this level, now extreme level, now from here definitely some movement will be there. So that is what you have seen in the closing hours. Actually, you may not take a trade because this is the last 30 minutes. I'm sure last 30 minutes many people don't take trades, but any DIT traders or WIT traders, they will take a trade because they are going to hold the positions. Because of their order flow, the movement you are seeing here. Not because of the intraday traders. And second thing, profit booking also might have happened here. But generally profit booking will happen for intraday trades at 2 o'clock before closing. I think your brokers will give you last 1 hour time or 45 minutes. That means 2:30 to 2:45 level, probably it will happen. That means you will exit from your trades, short trades. Some people would have booked even before. Unless you are F&O traders who wants to take that trades for the delivery point of view. So you would have placed your orders. Because in 75 minutes entry time frame, you keep your orders at the proximal line. This is the proximal line. So that's why here you have seen around 150 points or something more. Let us calculate. This is a 48,409. Let us say 48,410 approximate value. 48,410, and up to here it reached 48,616. Say 610. 48,610. 610 rupees. So 200 points move it has given. From 410 to 610, this is a 200 points approximately, a little over 200 points move it has given during the last 30 minutes of the trading session. Do you remember here this story? Previously we have seen. The prices were coming down. Finally they entered into this zone and 800 points move it has given during the last trading session. After that, the continuation we have seen bullish trade setup until prices entered into this supply area. Weekly supply, we have a daily supply. In between, some of the daily supplies were violated. We have seen all these things. After the daily trend is changed to uptrend. Now in the bearish trade setup, now 15-minute zones are violated. So this way the prices are now got. And not only that, this is a sideways setup also, because the 75 minutes trend is sideways. The sideways trade up also is same as you take bullish trade setup only, you take your trades. But bullish or bearish trade setups. Bullish setup you take only long trades, bearish trade setup you take only short trades. But in sideways setup you take both long as well as short trades you will take. That is one advantage we have. But the biggest disadvantage is you can't trade just like that. Only at extreme ends. So finding those extreme ends are very, very important. In between 15 minutes level you can't play. 15 minutes level and all, you have to play only based on 15 minutes trend. Okay, this is about Bank Nifty. See, opportunities you are getting, but how well you are understanding the price action. Based on that only your profits will be identified. That's why everybody follow Nifty and Bank Nifty. Sometimes you try or maybe take a small quantity during the intraday. If you are not using futures or options, at least use intraday, some few quantity you take. It is I hope all you people would have understood the importance of the trend. Because you learn trend is your friend. See how much effort I put on the trend related training sessions. I teach you the trend concept up to the maximum depth. Whatever the depth is there, up to that maximum depth I explained. I clearly explained you the meaning of what is trend is our friend. Until the end, what is that end I explained. When there is a bend, that bend also I explained. That's why again special videos also I made, continuation to our main training session. Those special videos also there in the same, in our training videos list, continuation only. The numbering also I have given, but one more digit extra I added. Let us assume trend is lesson 7. I didn't remember, maybe 7 or 8. Assume. So like I have given 7.1.1, 7.1.1.2. Like that I have given the naming convention. Each video I explained what is that end, what is that bend. For both uptrend, downtrend, I gave you the examples. Apart from that, one special video, the concept I developed, that is equal high and equal low. Based on that also I explained the entire statement. If you would have listened all these concepts, after that is based on zone violation also I explained. If you would have listened all those concepts, you would have understood the importance of what is the meaning of trend is our friend. Why we need to trade in favor of the trend. See, if you trade in favor of the trend, so much of success you got. You have seen today, you have seen yesterday, you have seen day before yesterday. But these concepts we added few more additional concepts like zone confluence. Along with the trend zone confluence also we mixed. 5-minute zone having a confluence with 15-minute zone. In the trending market, they have higher success rate. May not be 80% success rate, but definitely you have 70% success rate will be there. Anything above 60% success rate is an extraordinary success rate in supply demand zone price action. Please remember this point. Because in supply demand zone, if you are using 1:3, if 3 trades are failed, 1 trade is successful, still you are in the market. Still you won't get the loss. So that's why even if you 50% of your trades are failed, 50% of your trades are success, still you would have got a very good profit. Such kind of things you can execute. But now you are making your success rate more than 60% by using in favor of the trend, mixing with other concepts like zone confluence. Apart from that, again you are making use of high liquidity zone related concepts. Against the trend, still you are making some money up to the 15-minute supply zones. Today we have seen up to the 15-minute supply zone in Nifty we captured nearly 90 plus points we captured. That too in a bearish market, during the intraday bearish market. But yesterday we didn't take any such kind of trade. Why? Yesterday prices didn't reach high liquidity zone. Today they reached. Especially today you experience 75 minutes high liquidity zone. Prices entered. There you have seen a fine-tuned area. That level prices reached and gave you a good profit. See, I spent actually today a good amount of time on Nifty and Bank Nifty to make you people understand the importance of the trend. So understanding trend is the one of the important objective of this analysis. This is not only for your trades point of view. Those people who wants to learn trend related concepts or understand the trend related concepts in a practical way, today's HLQ analysis video is important. Yesterday's also I have given you. Day before yesterday also I explained about the importance of trend. But today I spend more time to make you people realize the importance of trend. This is an important video. Anyway, I'll keep this video in the our important analysis and videos list also. Especially people to understand the importance of the trend. Next one is, let us get into the high liquidity zones. Today we didn't get any high liquidity trade, but interesting fine tuning we have done. But I don't know how many of you people did the same way how I fine tuned the zone. ACC and GNFC, both we have identified the fine tuned zones. So this is the ACC daily supply zone. Already we have another ACC daily supply zone was there. This is the one we identified earlier. At the time, till the fine-tuned zones prices entered and came down. See? And this is again another, we have a drop, 3 base candles and drop. This is a 75 minutes high liquidity supply zone having a LOTL, level on the top of the level of another daily high liquidity zone. Both are daily high liquidity zones only, daily zones. So 2 high liquidity zones overlapped with each other. This is the first time I am seeing. I have seen in different time frames I have seen, but same time frame, LOTL, both LOTL zones are HLQ zones. Interesting. Many people think this zone is not having a fine-tuned zone, but let me show you. Interesting thing. So within this daily, I went to the 75 minutes time frame. So there is a 75 minutes fine-tuned zone. We have a rally, 1, 2, 3, 4, 5 base candles, again a drop candle. Some people may think this is a ERC candle. That possibility is also there. We can't rule out. But anyway, I consider this as a, okay, because it is looking like slightly bigger than medium size candle, this candle. Sometimes we can take exemptions when they are at the border area. So that's why I considered. That's why I fine-tuned up to type 2 level only. Now go to the 15 minutes time frame. We have a 15 minutes fine-tuned zone here. It's not a great 15 minute zone, but okay. We have a drop, 2 base candles and a drop. And follow through candle is also there, but many people don't consider this. But I previously explained you, sometimes we can compromise at some extent and we can draw to find fine-tuned zone inside that. Here our concentration is on 5 minutes time frame. So that's why 15 minutes level, okay, this is okay. Why I considered is because the leg out came completely out of the zone. That's why I given preference to this. If suppose the leg out candle, the body closed inside the zone, I should not consider this as a leg out. So good amount of the body came out of the zone, and after that there was a follow through candle from the close of the previous candle. Okay, this is not a large candle, this is only a medium size candle only. And inside this 15 minutes, again fine tuned with 5 minutes time frame. So we had an excellent 5 minute zone inside. Yeah. See here. We have a drop candle, we have base candle, 1, 2, 3, 4, 5, again drop candle, drop, base, drop. Maybe some people also may consider drop, 2 base candles and drop. That is also you consider. But the reason why I considered is the advantage we are getting when you draw a zone like this. Because initially I thought I can draw a zone, drop, or I can consider this as a ERC candle. That possibility is also there. This is a ERC candle as a leg-in. 2 base candles drop. But I am not convinced with this candle because it is a medium size candle. So that is the reason why. Another possibility you can consider drop, base. But this candle I got some doubt. So that is the reason why what I did, I just combined all these things. Together definitely there will be a good order flow will be there. So what I did here, I consider this as a ERC candle, leg-in candle, And then 1, 2, 3, 4, 5 base candles and a drop candle. From here to here I have drawn a zone. But the moment I draw this zone, interesting thing I found is already tested, second time it is tested, again rally base drop. So within this 5 minutes, another 5 minute zone is getting created. When it will happen, if it is a high liquidity zone, such kind of things we will observe. So that's why I am assuming 80% level, we at least confidently we can say this could be a high liquidity area, because generally many times the same zone, new zones are getting created. Definitely I assume 80% level, confidently I can say this could be a high liquidity zone. See again one more test, but didn't really enter, but came very close to this. On this day, definitely people would have got one trade opportunity here. And what about recently? Recently again you see, once again prices entered into this zone, picked up the orders and came down. So this is the high liquidity area. So because of this, if anybody would like to take a risk and maybe, see, one day this zone has to be violated. It will be having an expiry date, but we never know when is going to be the expiry. Only thing is we have to bet, that's it. Bet means accept the risk. See, if anybody would have taken a risk here, see, next time again it gave a very successful trade. And after that, see the push. It is not today. When it happened on last Friday. Last Friday, 11:35. See how much move it has given. This is the power of the high liquidity zones. And more our high liquidity zone with bearish and trade setup in the, or high liquidity zone with bullish trade setup. They are very powerful, even more powerful. Many times we are taking high liquidity trades against the trend. But sometimes you may find high liquidity. Probably this could be such kind of trade. See, now trend is changed after that. Gave a big move till today. SEC has given a very good big move. If anybody Friday would have taken a trade, but anyway, we cannot say that anybody has taken, because you may not be knowing it is a high liquidity zone. Because some people are having a concentration on a specific stocks. They trade on their favorite stocks. Observe. If anybody would have observed, you would have identified this as a high liquidity zone. But that gave a very good trade. And PVR Inox, already yesterday I told you, this is a retail trader zone. So we don't have any interest on this zone, we just leave it. And GNFC. GNFC is also, many of you might be thinking it is not having a fine-tuned zone. Yes, it is not having a fine-tuned zone, but still it is having a valid zone. Why? How can we say? You may ask the question. Let us see. First, let us get into the 75-minute zone. This is a drop, base candles, 4 base candles drop. Fine tune, there is no proper 15-minute structure here. We have a rally, 7 base candles, 1, 2, 3, 4, 5, 6, 7, drop. That way it is not valid. And there is no 15-minute zone here. And recent price action also, there is no 15-minute zone. But what I did, I identified, because by seeing all this price action, I just sensed maybe there it could be some 5-minute zone is there that might be playing as a high liquidity. So I went to the 5 minutes time frame. Then I saw the interesting things. First, where is the 5 minutes? We have a rally candle, 3 base candles and a drop candles. See, prices came here. We have a rally candle, 1, 2, 3, 4, 5 base candles, 6 base candles. Sorry, 5. 1, 2, 3, 4, 5 base candles. Again a drop candle. So a zone is created from this area only. How it is possible? If this is a high liquidity zone area only, new zones will be created. So definitely this could be a high liquidity area. At least 80% level, confidently we can say. Again, next time prices came and it near to this area it picked up because previously a zone is created. That's why just little before. See, many times prices again will enter or very close to this. This is one such kind. And see the move after that. A very big move it has given. And finally the last time prices again entered. They picked up the orders and they came down. But observe again, we have a rally, we have a base, we have a drop. From how it happened from the high liquidity. It picked up the orders and a new zone is created. Definitely next time also definitely, because a new zone is created, at least confidently we can plan a trade here. But unfortunately today prices did not enter into this zone. So we didn't get the trade opportunity. And what kind of trade it is? This is a 5 minutes high liquidity zone. This is a 75 minutes. This is an aggressive trade setup. Aggressive trade setup, different price action clues. You already learned around 3 or 4 I explained concepts to you. Out of that, one is a high liquidity area. You can have a lower time frame high liquidity zone inside a higher time frame high liquidity zone, which is not a fine-tuned zone. But still we can go for aggressive trade in the lower time frame high liquidity zone. The lower time frame high liquidity zone is 5 minutes high liquidity zone. Higher time frame high liquidity zone is 75 minutes high liquidity zone. So this is an aggressive trade setup. So this is how you should analyze the stocks. So this is about HLQ analysis. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.